Okay, so hello guys and welcome to this video, and we will focus on the equities market for this video. So what I've decided to do for today is I've decided to do three separate videos. One on equities, another on asset classes, and the last one will be on currencies. So let's just take a look at the economic calendar. I want to make really short videos and just straight to the point in terms of market analysis. So you can see for Monday, we had euro major impact and also core durable good numbers on dollar 830. Now, if you look at the rest of the economic calendar, we have 10 a.m. consumer confidence numbers tomorrow for dollar. And on Wednesday, that is the main economic release for this week's schedule. We have FOMC release. And also we have interest rate announcement on Canadian dollar. So Wednesday is going to be pretty hectic in terms of price delivery. And I also do believe that Thursday should play a significant role in terms of price delivery. So what you can see so far on currencies is you've seen a bit of bullishness, or we've seen a bit of bullishness on Monday. Now, what I decided to do with the equities market was our initial thesis of wanting to see lower prices on equities. That was validated at Sunday's open price, where the market tanked. I think we gapped down and ended up closing about minus 2% on the equities market, right? So that was huge for equities. And going into the later portion of the week, we saw a bit of a recovery, which did not align with my initial thesis of wanting to see much lower prices before we reverse and go higher. Now, the one thing I did clarify with equities is that whatever short or bearish calls or positions we're looking at, that was short term, right? The overall sentiment is still that we're very much bullish on the equities market. Now, what I am deciding to do here with the equities market is just to focus on the technicals, because if you want to focus on fundamentals and the news and what this person's saying and that person's saying, it can tend to be very distracted. And the reason why I say this is because if you have studied the last few months of the entire tariffs with Canada and Europe and just different China and the rest of that, you can tell a lot of time it's just all noise and it's just all fluff. And most times the market ends up doing what it would have done regardless, right? So the tariffs, and which is why I wanted to do a separate video on tariffs. The tariffs are just a way to, for me, it manipulates the market because a lot of people are reacting to whatever Trump is saying, and at the same time, Trump has always wanted higher stock prices. So I do believe we're gonna get that, right? We're gonna see terrible weakness this year and a lot of strength on equities market, which is why I've advocated to go and look up some really good stocks. I would advocate the main ones like Meta and the rest of them. I mean, companies whose products are the backbone of technology, especially like AI and all of that, right? So we're looking at Meta, for example, and Amazon. These are two main, and also Google, right? So these are three main companies I do think should, over time, over the next coming years, they should see huge increase in value. But let's go back to technicals for the equities market. Now, my initial thesis with wanting to see lower prices has kind of not changed. So what I am deciding to do here is just focusing on narrative. Now, if we just cycle through the S&P market and NASDAQ and also the Dow, you can see that they do kind of look bullish. But now the problem with this is we still have this liquidity down here, which I do believe is a really clean drum liquidity, right? That is on the S&P market. And I do believe we have the same thing on NASDAQ, where we fell just a bit short of this sell-side liquidity, and now we're starting to see the market go higher. And we can also see the same thing with the Dow. Now, what I don't like with this is how smooth we're starting to see the run back up. Now, if you are following what I'm talking about with the equities market, we wanted to see the market go below sell side, and then any run after that sell side liquidity that would have been our cue to go and load up longs on the equities market. But this one, I don't really think so. I do believe that we're going higher for now, but I do think that run higher is to set up a much more bigger cascade lower on the equities market. So what I do expect with the S&P market here is that we see going into FOMC release, we see one more push into buy sell liquidity. That is what I do expect. And some bit of wick fishing around this region, which is the initial region I suggested before, and wanting to see follow through in terms of the weaker longs down here, right? If you want to buy the equities market, if you want to resume looking for longs in terms of short-term trades, intraday trades, whatever, I would personally want to do so down here, right? Now, short-term, I do expect the market to run higher. But again, you have to remember that the bullish expectation we have on the equities market is not the actual move we're looking for. We're looking for this current bullish expectation to kind of set up a kind of bearish confirmation to then run lower, right? And then we can start to look for bullishness. So we have two potential plays with the equities market, looking for the initial crash, mini crash that causes a lot of panic, a lot of fear, which then recovers just insanely, and we continue to run higher. In which case, I would map everything. I would do videos and talk about, when it is starting or what I do expect. But the protocol is still the same. We're waiting for the market to go up here on the S&P market. For NASDAQ, I want to see a run. So these eyes are really, really clean. So I want to see the market run above these eyes here and kind of remain stuck inside this fair value. Now, personally for me, if we trade on the daily time frame through this bearish fair value gap, it reduces the odds of a potential huge sell-off before the mega rally on the equities market. Now, the reason why is because I still want to see that narrative of a failure swing between the equities triad. I want to see the equities index triad. I want to see that kind of play out where as we're running higher on the S&P market and we're wick fishing and convincing a lot of bulls to, go and load up longs in the market, right? We see a higher high on the S&P market, and then we go and take a look at NASDAQ, and NASDAQ is a lower high because it feels run above the side here, and also because this bearish fair value gap was much more salient in terms of a resistance for lower prices. And the same thing with the Dow, where we kind of also have, one more wick fishing above the side of the Dow, which is what I would expect. All right, I would expect some wick fishing around 50K. I don't like the way I've said wick fishing so many times in the last couple of minutes, right? It's starting to sound weird. But I would expect more stop runs around that 50K region, and then we look for kind of like a change to delivery, especially going to FOMC release and the market that sell off. So this is what I do currently expect. So my advice would be to not do anything for now, because I do think that trying to chase longs is foolhardy. And the reason why I think so is because there is a stronger chance that we sell off, right? Versus we see a huge rally in the marketplace. Now, if our thesis is invalidated and the market trades through this buy sell liquidity on a closing basis and X months away, that's not a problem. We just simply wait for price to return back to discount and resume going long, right? That's what we do. But at this point here, being a buyer is not advisable, right? So I would suggest any initial longs would be more than likely just to induce more retail buying, and then we flip short on a short-term basis and run for sell-side liquidity. Again, I'm not saying that you go up here and start to short that, right? We look for the same signatures that we looked for in the past, or like a change in sale delivery or price trading bearish inefficiencies and wanting to see lower prices from there. So that's going to be all for now on equities. The next update on the equities market would be on Wednesday morning or Tuesday evening, because I do want to see how Tuesday's daily candle closes, and that will kind of give insight as to how we either solidify expectations or think about moving to the sidelines or start to plan, a way to capture some of the potential moves on the equities market. So I'm gonna wrap it up here. I will see you in the next video, and in the meantime, trade safe. Peace.